Profitable Futures Trading, by www.profitabletradingtips.com. Profitable futures trading does not require a crystal ball to see the future. It does require, however, knowledge of the fundamentals that drive the futures prices of oil, wheat, gold, or whatever one trades. It also requires knowledge of the past. That is to say, profitable futures trading requires that the trader be able to follow and understand the technical aspects of futures price movement. Because market price patterns tend to repeat themselves, they can be predictable. Fundamental analysis of commodities, for example, requires that the trader be knowledgeable about production, storage, transport, and consumption or use of whatever he trades. This will give him a clear idea of the price limits of the commodity he trades futures in. However, market sentiment can vary and even diverge from what the fundamentals say a futures price ought to be. Thus, profitable futures trading includes the use of technical analysis in order to stay profitably ahead of market reaction. Trading oil futures, for example, is different from how to trade oil stocks directly. Although the current stock price of an oil company will take into account the same factors that affect oil futures on crude oil may well trade differently than an oil company. Profitable futures trading will take into account world events like the civil war in the oil-producing country of Libya. Oil futures typically go up when there is a hint of long-term shortages or disruptions in oil production. However, the stock of a company that owns leases in a country like Libya may well fall as the company will not be able to produce oil just as prices are going up. Technical analysis of futures prices will often give the attentive trader a heads-up to the sort of market inefficiency that follows news about changes in the fundamentals of a commodity. For example, news of continuing drought in the Ukraine, a major wheat-producing region, drove wheat prices up recently. At such times no one knows when the rains will come or if a sufficient snow cover will provide needed spring moisture for winter wheat. The market speculates, and those with the right skill set to anticipate price movements can profit from the market inefficiency that results until the market settles down. Profitable futures trading can be very profitable. Wheat prices especially can vary threefold over a couple of years depending upon supply and demand. After wheat futures reached the $11 a bushel region recently, they are currently back to the $7 range and could go significantly lower. For the astute trader, this can mean substantial profits in both buying and selling commodity futures. How to trade commodities such as grains successfully requires keeping up with USDA reports of crop conditions throughout the world as well as long-term weather reports. Traders will trade commodity futures directly or by options on commodity futures. By buying calls on futures contracts, the trader will profit from anticipated rises in price. By buying puts, the trader can profit from selling at the strike price even when the spot price drops substantially. For more insights and useful information regarding stock, options, commodities, and futures trading, visit www.profitabletradingtips.com.